Hello friends, and welcome to a video update. This is going to be a bit of a longer video update. We've got a lot of ground to cover. I was thinking about doing one of these updates earlier in the week. Instead, I wrote a couple of articles which I sent to you, and you got those early. I wanted to wait until we had the Senate Banking Committee hearing, which occurred yesterday. You had the head of the SEC and the CFTC both giving testimony. Now, you'd have to be living under a rock not to know that we've experienced enormous volatility in the price of Bitcoin, which has been down as low as 66%. The entire broad market has been down over 50% from the lows. And much of this selling has been driven around fear around what was going to take place at this Senate hearing. The big fear was that Giancarlo, who's the head of the CFTC, and Clayton, who's the head of the SEC, the fear was that they were going to come in front of the Senate Banking Committee and say, crypto is evil, we don't want it in our financial system, and we think it has no place here. This was what people have been deathly afraid of, which I've always known is ludicrous. I speak to lawyers in this space constantly. I talk to regulators in this space constantly. And the theme, the ongoing theme for the last 2 years is that we like this technology. We want to help this technology flourish, but we want to protect the investment public. We want to get in front of this new type of fraud that we're seeing in things like BitConnect, in ICOs where there's nothing behind them, in pyramid schemes that are taking place. So what was really incredible about this conversation that took place in front of the Senate Banking Committee was just how positive both the SEC and the CFTC are on cryptocurrencies, even ICOs, and distributed ledger technology in general. They came out blatantly and said, we are adopting a do not harm policy, the same policy that they embraced when the internet was brand new. So they've said, though, if you're a swindler, if you are trying to steal people's money, we're going to come after you, which they absolutely should. They also said that most ICOs are really unregulated securities offerings, and I would have to agree with them. There's a reason why I don't recommend ICOs in our service. Most of them that I've looked at are really a securities offering in drag. They'll throw the word utility on it, but I don't ever want the SEC coming back and saying that I was selling unregistered securities, which is a real risk in the ICO market. Now, of course, once something's trading in the secondary market, we don't have to worry about any of those types of concerns. But I get a lot of questions about why I don't recommend ICOs. And that's the reason. That's the reason why I don't ever want to be accused of selling unregistered securities. So I think that we need to feel very positive about how that meeting went, and certainly the cryptocurrency market is very positive and has really had a nice run up off the bottom. Now, this brings me to my second piece that I want to talk about. After you have had a catastrophic sell-off, which we have clearly experienced, there's two forms of bottoms. All right, assuming that the bottom is in. There is a V-shaped bottom, which is where you crash down and then you just zoom right back up. And then there is a W-shaped bottom, which is where you crash down, you rally, you crash down again, you revisit the low holds, and then you rally again. Of the two, typically a W-shaped bottom is a stronger, more powerful bottom than a V-shaped bottom. Now, everybody I talk to in the space is engaging in this wishful thinking of a V-shaped bottom. Maybe we'll have a V-shaped bottom. What I've learned is that life is difficult, nothing is easy, and I work under the assumption that things are generally difficult. So I think people are engaging in wishful thinking if they believe that this is going to be a V-shaped bottom. Hey, it'll be great for us if it is. Nothing changes for us whether it's a V-shaped bottom or a W-shaped bottom. The only reason why I bring it up is that if it's a W-shaped bottom, it means that we'll rally, we'll sell off again, retest that low, and then bump up off that low. So I need you to be emotionally prepared for that to happen. That could happen, right? We could have this nice rally. Who knows how long this lasts? Something gets the market freaked out. It comes back in again. You might see $5,900 Bitcoin again. You might see a $5,000 print on Bitcoin before this is all said and done. Okay, so it's critically important that you be emotionally ready for that, and then at the same point in time, not get too disturbed by it, right? This is the nature of this asset class. Every major recommendation we have owned that has done extremely well for us at some point has dropped 75 or 85%. So it really was just a question of time for when Bitcoin was going to mirror what has already happened in the rest of our portfolio holdings at some point, right? So just Bitcoin is essentially mirroring what we went through with Neo. It's mirroring what we went through with Monero. It's mirroring what we went through with Ethereum. Okay, this is the nature of this particular beast, right? To expect otherwise is asking an apple to be an orange. It's an apple. It's not an orange. So again, this is the reason why I've always stressed that good position sizing is really what keeps you into the market. Because whether we have a V-shaped bottom or a W-shaped bottom really doesn't matter. What matters is where I think we'll be this year. And this year, Bitcoin will make new highs. The entire cryptocurrency market will hit a new high valuation. And this is the bigger picture as investors that we need to rely on. Okay, trying to glide in and out of the market, I'm just not smart enough to do it. I might be smart enough to sidestep, a big drop, but I don't know that I'm smart enough to get back in, right? So I look at something like Ethereum, when it went to $20, and I was thinking, wow, this went to 20 really fast when we owned it between 5 and 9, and then Ethereum crashed to $5 or $6, and I remember beating myself up about that. Oh my God, why didn't I just sell it at 20 and then buy it back cheaper? I said, hold on a second. I think this thing goes to $360. So what if I sold it at 20 and it rallied and I didn't get back in, and then ultimately it's been as high as 1,200. So I think the bigger risk is actually not being in. It's missing that massive move. That's the bigger risk. So while maybe I could have sidestepped, what was ultimately a 75, 85% drawdown in Ethereum, I could have potentially missed a 10,000% return, and that is much more painful. And so the only way that you can adhere to that type of methodology, right, that type of approach, is because you have trivial sums of money at risk. So it gives you the ability to sit through a massive drawdown and not start, vomiting all over your desk out of fear. Again, this is the approach that I'm taking. I will continue to take this approach. I still think we are very, very early in the cycle. This really reminds me of the big sell-off that I went through in tech between 1989 to 1990. Some of the biggest names in the space just got absolutely annihilated. Oracle was down, I think it was over 80%. Apple was down 50%. Intel was down 45%. I mean, these were huge names. Just got absolutely hammered. And, they had been running all through the 80s. And just like now, there was a lot of doubt. Was high-tech a fad? Would it even make it into the next decade? And these stocks had moved so much that people were just convinced that they were done and they couldn't move again. And of course, they were wildly wrong. It was just the beginning of the move. So I think we're seeing a very similar story play out in the cryptocurrency and the crypto asset space. And again, it doesn't sound like very smart advice to just sit still. But very often it's the simplest advice that's the most powerful, that's the most valuable. When people start getting super complicated and they kind of make things more difficult than they really need to be. And really, our approach just to making an enormous amount of money in this space is actually quite simple, right? Focus on projects that have a great team. Focus on projects that are actually solving a problem worth solving, and focus on projects that we believe are going to create utility, that the usage for the coin is going to increase dramatically. And by doing that, we put ourselves in a position to own an Ethereum, to own a Neo, to own a Stellar, to own a Monero, something that just grows tremendously in value. And I want you to always remember, the most important metric in this space is usage, right? The coin has ultimately got to be useful, right? So it's either the perception of its usability is going to increase, right? The perception is going to increase that the coin is going to be more usable, or the actual usability statistics go up. If you focus on coins that have great teams solving real problems and utility statistics are moving up, you are going to make money, and you're going to make a lot of money. Again, the price pay to action for that is having to deal with volatility. But if you've listened to me in terms of the dollars that you have at risk, you should be sleeping comfortably. Sure, when you see your big embedded profits get, slapped around by the market, that's tough. I'm not going to say that it isn't. But knowing that you have very little principal at risk should give you a great deal of comfort. And most importantly, it will give you the staying power that you need in order to make millions of dollars out of this long-term move, which I believe has years and years to go. Okay, travel. I'm going to Lisbon in a few days. I've been invited to attend it's a private gathering of financiers, developers, early stage investors, a couple of blockchain executives. This group collectively has been behind some of the most important tech in this space. Collectively, they've created billions and billions of dollars in value. And, they want to get together and talk about the market and talk about, the kind of projects that they want to continue to fund and continue to support. And I've been invited in to kind of lend my voice to help shape that dialogue and really help shape where those investment dollars go for the kind of projects that that I think can help create value, and the kind of metrics that I think are important, and ideas that are really pro-investor and pro-consumer. So I will be the voice advocating for us, the folks that actually buy these tokens, with the folks that actually build them. So I'm looking forward to reporting back to you about that and letting you know. So I will be in Lisbon all next week. One last thing. Yesterday, I had a wonderful interview with Charles Hoskinson. He is one of the founders of Ethereum and, of course, the founder of Cardano. And just a brilliant chat. I'm going to see if he'll give us permission to release that transcript. I'll get the transcript written up, and if so, I'll shoot that out to you. But regardless, I'll have some type of report on that conversation, because it was just an excellent conversation with a very, very bright man, really doing incredible work in Cardano. So I will definitely have more for you on that. All right, friends, that is enough out of me. I know this one went a little long. So again, I will say that I don't know that we're out of the woods yet. My gut says we're probably going to have a W-shaped bottom, but that doesn't change anything that we're doing. It shouldn't change anything that you're doing. If you like to trade on your own, just be aware of the potential of a W-shaped bottom. The most important reason why I bring it up is that I want you to be emotionally prepared, because that could happen, right? We could rally and we could come back, revisit that low, even make a lower low before finally moving up to the point where we start breaking out to new highs. So it's important that you manage your expectations and that I help manage your expectations. I do not believe this is going to be just a quick down, quick up. I think it's going to take a little longer than that. And I think really when we see like a full-blown breakout, I think that's probably not going to happen till May when we have the consensus conference. And I think at the consensus conference, we will probably have some type of an announcement around institutional custody of crypto assets. And I think that will be the catalyst for the next round of big money to come in and for the markets to take off. So between now and May, I expect us to waffle around a little bit, and that's okay. It's going to give us an opportunity to get into some great projects at some wonderful, wonderful prices. All right, friends, again, that is enough out of me. I will catch up with you in the next video, and I want you to always remember, let the game come to you.